Bloomberg Audio Studios. Podcasts, radio, news.
I want to kick things off now, taking a look at shares of Galaxy Digital. It's seeing its stock under pressure to start this week. Shares down right now by about 15%. This comes as the company posted a loss of almost $500 million during the crypto market's fourth quarter crash, with trading volumes down 40% compared to the prior quarter. Joining us now for an exclusive interview is Galaxy Digital founder and CEO, Mike Novogratz. Mike, good to see you this morning. Thanks for joining us, especially on earnings day. You're fresh off the conference call this morning, and you said that, quote, pain is part of the ethos of this whole industry.
Unfortunately, I mean, that's true.
How much more pain is ahead?
Listen, you never actually know where markets bottom. Right, crypto, when Bitcoin went through 100,000, that was a major level that it broke down on. And so, when I look at the chart, 70 to 100 is probably the new range. And, we're at 76. So I think we're towards the bottom end of the range. There's a lot of pessimism out there. A lot of leverage has been taken out of the system. Bitcoin was not supposed to act like this, right? You had gold prices higher, the NASDAQ higher, rates going lower. This was the Trump administration was very pro-crypto. And so, something went wrong. The crypto market is still less than 20 years old, right? I think Bitcoin 09, so we're 16 years old. And it's immature. We had a huge run up from where people bought it at 50, 100, 1,000, 2,000, 10,000, all the way to 100, 130,000. And I think what ended up happening was people finally started taking profits. After we crossed 100, it felt like the community had won. And it was that sigh of relief, like we did it. We created this amazing ecosystem, this amazing asset. And there's been kind of like a seller's virus that got into the market. People blamed it on quantum. I don't think quantum in the long run is really the reason. I think there was selling, and that selling is getting, executed in the market. There was buying, sure, lots of new institutions are coming in, but prices are set on the margin and there have been more sellers than buyers. I think we're getting close to the bottom, but we'll see. You always know a bottom after you see it. Yeah. And listen, there's a couple things that could help, right? Market structure bill passing would be a big deal. People are really pessimistic on it right now. Okay. I actually am a little more optimistic that things get done because I think both sides want it done, but we'll see.
So what is the catalyst that turns the tide right now? You mentioned a market structure bill. Maybe that will bring some optimism, but I don't know. Is there anything else that could turn around this trade?
Yeah, listen, part of this acceleration recently downwards is the thought that Kevin Warsh is going to be very hawkish. Listen, what I think Kevin did is he took out the tail risks for inflation. Right, he's a man of integrity. He has worked alongside Stan Druckenmiller for a long time, literally since he left the Fed. And so you don't think he's going to do whatever Trump wants him to do. That said, he's pretty dovish right now. And I think once he gets in and starts talking, looking at the environment that we see today, he wants rates lower. And I think once that market kind of rewrites him as a dove, at least a dove, given the current environment, that also could help. There's probably been an overreaction on how hawkish he's going to be. But I do think, listen, he took out the tail risk, which is a good thing for America and not necessarily a good thing for gold, silver, or Bitcoin.
I appreciate you making the connection back to the macro environment overall. I'm curious, with this softness that we're seeing in crypto and Bitcoin, how does that change what Galaxy is doing? Do you still plan to launch this $100 million crypto hedge fund in the first quarter that will bet on rising and falling prices? Does it change your timeline, how you're thinking about it?
Yeah, the great thing about this hedge fund is it's really a fintech fund, and it's the broader ecosystem. So I said on our call, this is a tale of two cities, or really three cities, because we have this data center business, which is booming. Thank God. If I didn't have the data center business, I'd feel a lot worse. But our data center business is now, worth more than our crypto business. But within crypto, there's still a bull market, and there's a bull market in infrastructure, right? The traditional banks and finance companies are moving into this space quickly, and you're seeing we're seeing lots of opportunities to partner with them around building wallets, around staking, and around really thinking about how tokenized real world assets, move into the world. And so I think I haven't seen more excitement since I started from the traditional players to get engaged in digital assets. And we've got the old version of crypto, the tokens that exist today, that just don't seem to have the same support, the same appreciation, the same energy in them right now. And so some of that energy is shifted, and you see things like, perpetual swaps on equities booming all of a sudden. So using the crypto infrastructure for real world assets, the crypto leverage system for real world assets. And so that part of the business is really exciting. We're leaning into it, both in hiring and more, and utilizing our engineering team to help others get in this game. The other part is moving things more on chain, and that is happening quickly.
Right.
So you're going to see credit on chain, and you already see the boom of stable coins. I mean, you look at the volume of stable coins in the first month of the year, it's explosive. And so we are moving into a digital world, and it's going to run on crypto, blockchain rails.
Yeah.
That's just not correlating with the price of Bitcoin, the price of Ethereum, the price of Solana, Ripple, you name it.
So, Mike, with this excitement with the data center business, would you consider a spinoff to separate your crypto and AI data center businesses? Would you be open, perhaps, to selling your data center unit to any of the hyperscalers should they come knocking on the door?
Listen, we're in the build mode on the data center business. We just got 530 megawatts of power approved down in Texas. That's probably the largest new power approval in the United States for a while. And so I couldn't be more excited about that. We're engaging now with potential tenants. You can guess who they are. And so I think we're going to run this data center business, and we're going to grow this data center business ourselves. The capital structure at Galaxy is something we think about a lot. And I said before, if A plus B is a bigger number than A plus B, we should stay together. And if it looks like we're getting penalized, we'll figure a way to maximize shareholder value. And so right now, in this short term, our stock seems to trade very cheap relative to what I think the data center business is worth alone, let alone the value of our book and our crypto business. And so, we're certainly looking at it.
Hey, Mike, very briefly, and then we're going to do some news and come back to you in just a few minutes. You've seen a lot of cycles. You have the tattoos to prove it. Are we in a crypto winter right now? Yeah,
listen, I mean, we were at 130,000 and we're now at 76,000. And so that is what a 45% drop. If I did my math right, or maybe it's 40% drop. That's way through bear market, and that feels awfully chilly. My question is, when is spring coming? And I think we're closer to spring than we are to the start of winter.
Big picture, when it comes to any kind of regulation, when it comes to crypto, is what's going on with the crypto market structure bill. And the big sticking point at this moment is whether crypto companies can give some reward points or yield on stablecoin balances. You've said that the crypto industry is going to lose the battle against the banking lobby on this. Why is that, Mike?
Listen, there are a lot of banks. They've done this a long time. They're good at lobbying. They have community banks, their cousins, their poor cousins, very poor cousins in every district of every congressman. And the community banks are being used very effectively to say, oh my goodness, we're going to have this terrible deposit flight, and then we'll not be able to give credit. It's not a real story, but it's working. Because listen, if people wanted to take their money out of community banks, they could have put it into Galaxy's 8% offering or SoFi's. There are so many neobanks, and yet deposit flight is slow, right? Deposits in general are sticky. And so over time, yes, there would be deposit flight, but there should be, because in most of those banks, including JP Morgan, Wells Fargo, you name it, Chase, Citibank, you put your money in your savings account and they pay you nothing. and they make a whole lot of money leaving it at the Fed at 3.5% or 4%. And so it is terrible for the consumer. It's ironic that Washington, both Democrats and Republicans, are saying, "Hey, let's side with big banks and not the consumers, not our constituents." But that's exactly what's happening. And so Brian Armstrong and the stablecoin issuers who are saying, "Hey, we want to actually have an innovative, security that allows us to pass on some of that interest to our customers through rewards, or actually, in the perfect way, would be through direct interest." Mm-hmm. But banks are strong in the lobby, and I do think a deal gets done somewhere in between. But right now, both sides are kind of at a Mexican standoff. Why do I think a deal still gets done? Like, the Republican senators have put a lot of time in this and have a lot at stake, right?
Yeah.
Trump is the quote crypto president. You've got the House and the Senate. You better be able to pass a crypto bill, or you look pretty weak.
Give us your view on when you think that market structure bill will pass.
And the Democrats have the same. The Democrats don't want the crypto pack, which just came out and said we've got $190 million of a bazooka ready to shoot at people that stand in the way of crypto. And so the Dems just want to pass this thing and have crypto off the table in politics. It never should have been political. It always should have been a bipartisan issue. Elizabeth Warren made it political.
Okay.
Gary Gensler made it political. Well, and so, listen, I think this is, 2 weeks, it's 6 weeks. And I think my hope is we have something done.
Okay. I want to get your take on prediction markets as well. The CFTC chairman, Michael Selig's clearly talking about the need to come up with some kind of rules of the road for this part of the market. It's growing very, very quickly. And I'm wondering, from where you sit, what is the single most important legislation or rule that needs to be put forth on prediction markets?
It's a good question. I think the industry, not the prediction market industry, but the sports betting industry, the gambling industry, got caught off guard that the CFTC basically said, "Hey, this is a new form of security, or a new form of a platform for people to use as a hedging to make bets on," and they allowed it. Right. And so since then, there has been a furious lobbying effort by the casinos and the sports betting places to say that's not fair. We have all this compliance we need to do, and these guys don't. And so I'm guessing the CFTC is trying to thread the needle to keep the existing world happy to a degree, and not have to go back on this new industry, which is innovative as can be, which is growing, which has captured the imagination of not just the retail users of it, but somebody like ICE, right? Jeff Sprecher put $2 billion into Polymarket.
Yeah.
And so, this is another battle of incumbents trying to protect their turf against an innovative, new upstart, yes.
Well, our colleague Emily Nicole reported back in November that Galaxy Digital is experimenting in prediction markets, discussions with Polymarket and Kalshi. What's the latest there?
Again, we didn't invest in those guys way back. I wish I had. I had the opportunity to, and I quite frankly wasn't convinced that without sports bet, that just, you weren't allowed to do politics back then. Sports betting seemed off the table. And so I didn't see where the TAM was. And, these guys proved me wrong, and the CFTC gave them the pass. And so if you look at prediction markets, most of the volume happens around sports betting. And so, there are not that many things you want to bet on every day, but sports happen. They have their defined outcomes. Right, politics, which again was illegal for U.S. investors to bet on politics, and you had the whole raid of Polymarket. This is a new regime. It's a new administration with a very different view, and so what could we do? We want to look at infrastructure. We want to be market makers. We want to be providers of liquidity, and we're just getting started.
Other trading firms, Mike, have also considered getting involved in prediction markets like jump trading or sports betting. AQR Capital Management has talked about sports betting. How do you see this competitive landscape developing over the next year?
Yeah, listen, I mean, if you think about sports betting, you've got, Susquehanna's been a giant in it. These high frequency traders with huge technology budgets they'll trade anything that moves, and they're good at it. And so I think there will be lots of liquidity provided from that same group of people that provide liquidity in same-day options and in that market making everything. And so if retail comes, there will be plenty of institutions to pick up their pennies and nickels.
Mike, got to leave it there. Always love it when you join us on Bloomberg Crypto. Thanks so much for taking the time, especially on earnings day. That's Galaxy Digital's Mike Novogratz joining us from New York.